Everyone, House taxation will be called to order. Good to see everybody's bright smiling faces on a afternoon. First item of business would be requests for bill introductions. Do we have any requests? Representative Francis.
Thank you, Mr. Chairman. I have RS 3912.
You want to give us a little description on what that is?
Not really. I guess I have to go ahead and do that so
Yes,
we
you
know
do.
what we're voting
Thank
on. It is a bill regarding hands-free driving in active school zones and construction zones.
Is that a tax bill?
I've been trying to make that connection all day long.
Will this be going to the Transportation Committee by chance?
It definitely would if transportation was an exempt committee.
Okay. Yeah, we usually don't. The speaker did let me know that this was something that we're trying to get moving forward. So this will be one of the rare moments that will, well, I guess I shouldn't say the request is approved just yet. I think I did hear objection over there, but this is a bill that'll be going back to transportation after it's been requested. But are there any questions for the carrier of the request? Any objection?
Oh, and that's on behalf of the Kansas Contractors Association.
That explains it. No, sorry, inside joke. Let's see, seeing objection, no, I'm kidding. Without objection, the request is approved. Any further requests for bill introductions? Seeing none, we will open up our first hearing, our only hearing of the day, and that is House Bill 2773. And I'll turn to the revisor's office for an overview on that bill, please.
Thank you, Mr. Chairman. House Bill 2773 would provide for the apportionment of business income for manufacturers of alcoholic liquor. And this would depend on whether the taxpayer is a qualifying Kansas taxpayer or a general manufacturer, as provided in the change in the bill. So commencing with tax year 2027, a qualifying Kansas investor will apportion business income using the single sales factor if such taxpayer maintains both an average value of real and tangible personal property owned or rented that exceeds $5 million and such property is used in this state during the tax year, and the total amount of compensation paid in the state during the tax year exceeded $2 million. General manufacturers, so everyone else, including all other manufacturers of alcoholic liquor, would apportion their business income using the three-factor formula. And with that, I'd be happy to stand for any questions.
Do we have, when we passed the single factor apportionment, there wasn't any provisions that were, I mean, this one seems like it has a monetary threshold. There wasn't any thresholds in the prior legislation, was there?
Not in the most recent, no, not in what was passed a year or two ago. No, it was basically all, essentially most of the categories were condensed down into the single factor. So okay. There was no distinction like there is in this new provision.
Okay, thank you. Committee, are there any questions for the revisor on the bill? Okay, seeing none. Thank you, Adam. Did you have one? Oh, okay. Next, we'll turn to Department of Revenue for an overview on the fiscal note.
Mr. Chairman and members of the committee, Kathleen Smith with the Department of Revenue. We are unable to provide an estimate on House Bill 2773 because of confidentiality concerns. We believe that there are fewer than 5 filers that would qualify for this specific provision, and so therefore then we're not able to provide an estimate.
Yeah, thank you for that clarification. I think there will be a fiscal note. It's just a matter of the privacy to
correct
to know what that dollar amount is, unfortunately. Okay. Committee, is there any questions on the fiscal note? Representative Kahar.
Thank you, Chair. Can you explain the difference between single factor formula and the three-factor formula? And without any confidentiality issues, would this generally be more the state would collect in taxes or less the state would collect in taxes?
Do you want me to allow the revisor to address that question? Or research, if you guys want to paper, rock, scissors, see who wants to.
I can speak to the formulaic approach to apportion income. You know, for businesses, especially the businesses that operate, you know, across jurisdictions, they're required to apportion their income to states. As part of determining how to apportion income, states are allowed to use different methodologies. Previously, most of our methodology was the three-factor formula, which included sales, payroll, and income. So property sales, and payroll, excuse me. A couple years ago, that was condensed down to what is called the single factor, which would be sales, to determine how you apportion income. What's the second part of that question?
Do you want to restate? Do you any further questions, or did that answer? We might try to get further answers for you if you wish.
I think I understand the three factors versus the one factor. So would that, since we don't really have a fiscal note on this, would this be an adverse effect on the state general fund or an increase?
It would probably have, because the way we're crafting this, they're going to, the in-state businesses are probably going to take more advantage of, or the out-of-state businesses would take more advantage of this versus your in-state corporations, because in-state, well, I probably shouldn't try to answer that, but yeah, Representative Sawyer's going to take a stab at this.
Yeah. Actually, it will cost, we don't know, again, they said it's indeterminate, it will cost the state money, because the way the bill's written, those that don't have a lot of presence in Kansas, they can keep using the three factors. So that'll keep their taxes the lowest possible of the methods. Those in Kansas will use the sales factor, which will keep theirs the lowest. So everybody will be paying the lowest that they could pay. So since that would be, like if we made them all pay single factor, that would give more money to the state, because those that are out of state would be paying more in taxes. If we made them all three factor, then those in state would pay more in taxes. So by letting them pay, by having the two levels, those with less presence getting to use the three factors, and those with the big presence getting to use the sales factor, that means everybody pays the lowest possible corporate income tax in Kansas. So we'll let them all pay the lowest, that will have some cost to the state. Is that?
Yeah, that's, I mean, everybody's going to do what's most advantageous to them and their companies. So, but we just, with so few that would apply or file for that, it'd be hard to get an accurate fiscal, or they could get an accurate fiscal note, but there's so few filers that they can't provide that information for confidentiality.
So it would give the benefit to those that are outside of our state instead of the ones inside of the state?
Yeah, the ones that are inside the state are probably using, they're going to qualify for the single factor. And that will use it, and then the ones that are outside the state will probably retain the three factor. Is there any further questions? Okay, if not, thank you, Kathleen. Okay, we'll open up the proponents section of the bill and welcome first to committee William Wilk with the Kansas Chamber.
Good afternoon, Mr. Chairman, members of the committee. My name is William Wilk. Senior Director of Government Affairs for the Kansas Chamber of Commerce. The Kansas Chamber appreciates the opportunity to provide proponent testimony to House Bill 2773, which modifies the alcohol manufacturing exemption passed from the single-factor apportionment legislation in 2025. Shortly after the passage of House Bill 2331, we received a call from one of our longtime alcohol manufacturing members based out of Atchison saying that they would like to utilize single-factor apportionment, but were unintentionally carved out of the bill. Alcohol manufacturers have a strict selling process they must follow in the state, first going to the distributor, then to the retailer, to then be sold to the consumer. At least 2 states have passed this single-factor apportionment with a carve-out for alcohol manufacturers like what was passed in House Bill 2331. We were able to work out language setting parameters for alcohol manufacturers, allowing those in-state to utilize single-factor apportionment while maintaining the 3-factor approach for out-of-state manufacturers. Section 1, F1, lines 4 through 21 outlines the parameters set for alcohol manufacturers to utilize single-factor apportionment in Kansas. The company's property must exceed $5 million and their payroll must exceed $2 million. If those parameters are met, the alcohol manufacturer will be able to utilize single-factor apportionment, only taking their sales in the state to calculate their corporate income tax liability owed. In closing, the discussions within our membership have been extensive in moving to single-factor apportionment. While House Bill 2331 had unintended consequences, House Bill 2773 accommodates interest of all parties. Thank you for the opportunity to testify in support. I'm happy to stand for questions at the appropriate time.
Okay, I think we might wait for questions at the end once all the conferees have spoken. So we'll move on to the next conferee, and that would be Jeff Rogers, MGP Ingredients. There should be a red light on the microphone to hit, make sure that's on. I just wanted to make sure your microphone was on. There we go.
All right, here we go. My name's Jeff Rogers. I'm the Director of Tax and Insurance for MGP. MGP Ingredients, Inc. is a long-term Kansas business. We were founded in 1941. Our primary business in Kansas is located in Atchison, where we have a manufacturing facility, an R&D facility, and administrative support. We employ about 150 people with an average wage of about $117,000 per our last HPIP application. Depending on performance metrics, we typically pay $18 to $30 million of Kansas payroll a year. In addition, in 2021, we merged with a St. Louis company, Luxco, and we also have a manufacturing facility in Indiana. The concern is that the Kansas law for 3-factor apportionment for alcohol companies passed in 2025 will have a negative impact on our company, obviously a big in-state employer. MGP has currently elected 2-factor, which will go away in 2027. Our current apportionment runs 15 to 18%. Apportionment's the percent of your income that's sourced to the state. With this new law, we would increase to 23 to 24% based on our most recent apportionment data. So thus, the new law will adversely affect us. What we're proposing is legislation or language that would allow the 3-factor to remain for the out-of-state companies, but for your bigger Kansas employers like ourselves to go ahead and be able to use single-factor. Thus, we're just asking you guys to support us in getting this change. We honestly think we're probably the only people affected by this. And, you know, it's been a tough year. If you look at our company, it's been a tough year in the alcohol industry, so any support would be helpful. And I'm happy to answer questions too, or come back if you need me.
Thank you. I will have a question for you, so don't go too far, but we'll go on to the next conferee. Thank you. Next, I'd like to welcome Jason Watkins.
Thank you, Mr. Chairman. I'm Jason Watkins, Executive Director of the Kansas Beer Wholesalers Association. We're also in support of this bill. I'll be brief. We see this bill as a compromise. When you passed House Bill 2331 in 2025, you exempted the manufacturers of alcohol, and for very good reason. Alcohol is a little bit different. I always tell people it's kind of if you're ever playing trivia, we're maybe the one product that's actually had 2 constitutional amendments, so we're unique. There was a bill that got introduced earlier this year to address the concerns that the previous conferee spoke about, but that just wiped away the exemption for alcohol manufacturers. Roughly 75% of the beer that comes into this state, or 75% of the beer that's purchased in this state, comes from three companies: Constellation, Anheuser-Busch, and Molson Coors. They don't brew their beer here. So the previous bill that was introduced earlier this year was concerning to us because it would have led to an income tax increase. And fair or not, these brewers pass that cost on to their consumers. So beer distributors are very, we like to protect our consumers as much as we can. We often talk about Joe Sixpack. That's not a negative connotation. We're big fans of Joe Sixpack. That's who this tax increase would have gone to, is our favorite customer's name, Joe Sixpack. So we think this is a great compromise. It addresses the concern of our large in-state distiller while protecting the interest of beer consumers in the state of Kansas. I do want to just state very quickly, kind of based on the question that was asked earlier, for out-of-state manufacturers of alcohol, the passage of this bill would change absolutely nothing. Not passing this bill would change absolutely nothing for out-of-state manufacturers of alcohol. The conferee that spoke right before me, if you pass this bill, that does benefit them, and we're 100% for that. But just to be clear on the question that was asked earlier, passage of this bill doesn't change anything for out-of-state manufacturers of alcohol, including Anheuser-Busch, Molson Coors, and Constellation. So hope that cleared up a little bit. We are in support of this. Encourage you to pass it. Appreciate your work, and I'm happy to stand for questions at the appropriate time, Mr. Chairman.
Thank you. That's all of the ones that I have listed showing as proponents. Is there anyone else that would wish to speak before the committee as a proponent on House Bill 2773? Seeing none, we'll go ahead and open it up for questions. Representative Kessler.
Thank you, Mr. Chair. Actually, Jason, if you don't mind. So I just want to make sure I'm actually fully understanding this. I kind of got confused there for just a minute. When we passed this bill, went to single factor, we had a carve out for alcoholic manufacturers. That carve out where they could continue using 3 factor, is that correct?
3 factor, yeah.
Right, just for the alcohol. Everybody else that deals with Kansas, for the most part, was going to go to a single factor, correct?
I don't know.
I mean, in theory, I guess. I mean, that was the only specific carve out that we had in that bill.
It's the only one I paid any attention to.
Yeah, that's why. Me too. So okay. So this, but this doesn't affect like Anheuser-Busch. This doesn't affect them. They are still allowed to use 3 factor, correct?
Correct.
Okay. This 3 factor, and then including an alcoholic manufacturer, distributor, or whatever that wants to go to a single factor, as long as they meet these requirements, which it sounds like we maybe have 1 in the state that does, would be able to go to a single factor. Is that correct?
That's correct. That is the classic win-win.
Yeah, got you. Thank you very much. I just want to make sure I was super clear on that. Thank you, Mr. Chair.
Further questions, committee? Representative Sawyer.
I'll just ask you, Jason. I was gonna ask William, but you'll do. You'll be great. The other bill that originally would have been introduced would have just moved all alcohol under single factor. Was that the bill we didn't hear?
That's correct. The bill that was introduced earlier in the session would have moved all manufacturers of alcohol, whether in-state or out-of-state, to single factor, which would have been a sizable income tax increase on the out-of-state alcohol manufacturers.
Yeah, so that bill, the in-state would have got a tax break. They all would have paid more taxes. Your compromise language, everybody pays the lowest rate.
Yeah, I would agree with that assessment, with the caveat that nothing changes per current law for the out-of-state manufacturers of alcohol.
They're already on the 3 factor because they
Correct.
had a special carve out in the other bill. All right, thank you.
Representative Smith?
Thanks, Mr. Chair. Jason, are we protecting the out-of-state companies with this?
No, I don't think so. I think who you're protecting are Kansas residents that, you know, in our case, we're talking about the consumers of beer. If you had a sizable income tax increase on the out-of-state manufacturers of beer, and again, you know, where 75% of the beer consumed in this state comes from three suppliers: Constellation, which is Corona, Modelo, you know, Anheuser-Busch, you know, Budweiser products, Molson Coors, Coors, Miller, those. That's just going to get passed on to your constituents. So if you make these out-of-state manufacturers of beer, if you increase their corporate income tax, that's going to get passed on to the people that you serve, and they're going to pay higher taxes every time they go to, let's just as an example, let's say there's a liquor store called Tom's Liquor in Wichita, Kansas. Those taxes are going to get passed on to your constituents. So I think you're protecting your constituents and not the out-of-state manufacturers of beer.
Yesterday, we talked about, forgive me for not thinking, the smoking, the inhalers, and we're going to, you know, we're going to tax them a little bit more, but yet we don't want to tax the beer a little bit more. So, you know, I want to protect the people that buy, but on the other hand, you know,
And that could be that there's different philosophies on smoking versus beer.
Further questions, committee? I got one. It's not really a softball question, but my question here is, you know, if we had went after the single factor apportionment bill last year with this mentality, it wouldn't have been effective. So help me understand, because all of our other out-of-state businesses that fell into the transition, they don't qualify for three-factor anymore. They had to go to single-factor sales. Help me understand why we need to do this for alcohol when we didn't do it for all of the other businesses that are now under single-factor and forced to do that.
Well, I would note, Mr. Chairman, that you talked about a softball, and that's more of a zinger. But doing my best to answer your question, you know, the first thing I would say is this was a decision that you made last year. So, you know, and I think we're talking about this is a different product. I think the economies in alcohol are different from other products. You know, as I mentioned, this is a unique product. You have a three-tier system for the manufacturer, distribution, and sales of alcohol. There are a few other things that are treated like that, but not very many. The whole manufacture, distribution, and sale of alcohol is very different from other products. And so I think a certain differential in consideration is appropriate in this regard. And as I said earlier, you know, that nice trivia question, what's the one product that's had 2 constitutional amendments? It's alcohol. So it is different. And I would button this up with saying, at the end of the day, this keeps your constituents happy. If they get to drink beer and they don't have to have an increase in price on that, they're happy.
Here's one that's maybe a little bit easier. When we were looking at moving from three-factor to single-factor sales, I think Kansas and Oklahoma were the only 2 Midwest states and some of the only 2 in the nation that hadn't moved to single-factor with certain things. Do you have any data, or this might be something that the chamber conferee could address too, is alcohol typically carved out when states adopt a single-factor apportionment? Help me understand how that looks across to other regional states in our area.
Yeah, and I apologize, Mr. Chairman. That's probably something I should have gone and taken a look at before I came up here to testify. Looks like the state chamber does. I will take this opportunity to point out that it's not an apples to apples comparison. Beer that comes into this state has a gallonage tax of 18 cents a gallon. Over in Missouri, they just passed a bill last year. Their American-made beer is taxed at 2 cents. They went from 6 cents to 2 cents a gallon on their gallonage tax. We are 18. So at the end of the day, that has, quite a bit of difference when it comes to what gets passed on to your constituents when they buy a 12-pack of beer.
I might turn to the
William
Chamber
Well,
for that.
Kansas Chamber, Mr. Chairman. I know Mississippi has a carve-out specifically for alcohol manufacturers, and I believe Ohio is the other state that has the carve-out for alcohol manufacturers.
Okay, thank you. I had one question for Mr. Rogers, if you'd be willing to entertain a question. I'll make it as easy as possible. We currently have the dollar amount thresholds in the bill. My biggest concern of that is those are stagnant numbers. What happens, I'm assuming your business would fall underneath those, so you would still. Okay, so you would. I think we need to get your microphone on. There should be a.
Sorry.
There you
So
go.
I have 18 to $30 million in payroll, and I have 100 million plus in assets. So I'm way over the top of that bill so that we would get to single factor. The other places that we do business are in Indiana and Kentucky. They are both already single factor. Did I answer your question?
Yes, yeah, I think I was thinking about that the opposite way, so I just wanted to make sure that those parameters were going to be, they work for you today and they will work for you 5 years down the road, 10 years down the road.
Absolutely. I mean, I've been with the company 10 years, and we would exceed those every year for all 10 years.
Okay. Now, you said you have businesses in Indiana and Kentucky, and those are single factor, they're not three factor?
Yes.
Do you know if do they have any of these provisions where you have to have a certain dollar amount threshold? Or?
They're just a single factor for everything, but we're supportive of the beer industry. We're not trying to take away from the beer industry, as our industry and the beer industry have suffered, a lot over the last few years. In fact, if you look at our company, our stock has been down from 125 high down to 20. So we've had a really rough 3 or 4 years. I assume that beer's had something similar. So we're very supportive of our beer cousins that we would, like them to retain the 3 factor.
Yeah, very good. Thank you. Committee, are there any questions for any of the conferees? Representative Smith?
Yes, sir.
Thanks, Mr. Chair. Forgive my question here, Mr. Chair. I'm from Atchison.
Okay.
I brought my team to Atchison.
Yes. I think we had lunch with you. I was in the conference room.
And they said, "What is that horrible smell?" I said, "Guys, it smells like home." I love that smell. Thank you.
Right. Thank you, sir.
Well, seeing no further questions, thank you all for your testimony. We'll move on now to, and I'm not showing any opponents or neutral testimony. Is there anyone wishing to speak to the committee as opponent or neutral? Okay, seeing none, we'll go ahead and close the hearing on House Bill 2773. Committee, I did have on the agenda to take action on Senate Bill 368. That was the one we heard just the other day. Might go ahead and turn to the reviser for a quick overview. Hopefully that's still fresh in everybody's minds.
Thank you, Mr. Chairman. Senate Bill 368 would enact the Healthcare Sharing Ministries Tax Deduction Act, which would essentially provide for an income tax subtraction modification for certain qualified healthcare sharing expenses paid by a qualified individual and certain qualified healthcare shares received by a qualified individual, essentially providing for the subtraction modification. In the Senate, they imposed or adopted an amendment whereby the subtraction modification would be limited for each taxable year not to exceed $5,000 for an individual and $10,000 for a married couple filing a joint return.
Thank you, Mr. Siebers. Committee, any questions on the bill for the reviser? Seeing none, we'll go ahead and move on to discussion on the bill. Is there discussion? Representative Kahar.
So for typical health insurance, is that something that everyone can write off? Is that why we're considering this? Because most people can write off their regular health insurance? Does anyone know that?
I might turn to staff and see if they can answer that.
So employer-sponsored health insurance is excluded from income at the federal level, and that flows through to Kansas by virtue of conformity. But if you were individually purchasing your health insurance, that isn't the same.
Trying to tell if Representative Awerkamp is thinking to himself or if he has a question. Is there any further discussion or questions on the bill? Representative Kahar?
Can you remind me the fiscal note on this one, please?
It's 1.2 million per year once fully annualized. I believe the first year is about a third of that, which is typical for income tax bills because of the asynchronous nature of income tax law versus state fiscal years.
Representative Howerton.
Thank you, Mr. Chair. And this is a question for the reviser or research. Are healthcare share ministries regulated in Kansas?
I can't remember if we covered that during the testimony or not. I don't think that's something we could answer. The Department of Insurance could probably answer that pretty quickly, but
Okay.
would
My
probably have,
assumption is, from the research I've done, they are not. So I just wanted to verify. So my concern is how would we regulate that income? I always bring this up when it comes to income tax stuff. How do we protect from fraudulent claims and different things like that? If it's not regulated, if we don't know who's operating within Kansas, then how would we protect that? So that's kind of the question I have in my mind right now.
yeah, I'm not sure we could answer that. We'd have to perhaps visit with Department of Insurance on that. Seeing no further discussion, is there wishes on what we want to take action on with the bill? Or is there further discussion? Representative Awerkamp.
Thank you, Mr. Chairman. So I did introduce a similar bill to this last year, and it was requested by CPA, who said Missouri allows this. So I just checked on it again. Yes, Missouri does allow the deduction for these healthcare ministries. So it was his suggestion, can you get that in Kansas as well? So I think it's worth giving it a shot, and I think it's worth working it through the process. I'm sure it's got a long path, but I want to give it a shot. So I forget the bill number, but I'll move we pass this bill out.
Senate Bill 368.
Senate Bill 368 favorably.
Okay, we have a motion by Representative Awerkamp to recommend favorably for passage, Senate Bill 368. Do I have a second? Second from Representative Bryce. All those in favor, please say aye. Aye. Opposed, no? No. The ayes appear to have it. Division's been called. All those in favor, please raise your hand. Okay. And those opposed, please raise your hand. On a count of 11 in favor and 8 opposed, the motion carries. Anyone wishing to be recorded? Okay, Representative Carlin as a negative vote. Representative Stogstill. Any other no votes recorded? Representative Sawyer Clayton. Anyone wishing to be recorded as an aye? Okay, Eddie wants to clarify something.
The information I provided in response to Representative Cahar's question, while personally purchased insurance premiums are not excluded from insurance, if the taxpayer itemizes their deduction, they would be allowed to deduct those as itemizable medical expenses. But then that extends, assuming that they exceed the floor for itemized deductions, which I believe is 7.5% of your adjusted gross income. So there is a scenario in which they may be, but is going to be dependent upon the specific taxpayer, whereas employer-sponsored insurance is always going to be excluded.
Yes, Representative Cahar.
To make sure I understand, so most traditional insurance company, you're kind of getting the benefit on the front end because it's not included in your take-home pay that you're taxed on. This just gives that opportunity for those who are purchasing it for themselves on the back end.
Who are purchasing for themselves the share within the healthcare sharing ministry.
Yes. Okay. Thank you for clarifying that. I appreciate it.
All right, committee. That does conclude our business for the day. Is there any announcements? Seeing none, we are adjourned.